Good afternoon and welcome to the Dell Tech Biz News Section 12B webinar. I'm Stuart Lohman, and with me is Jonty Sachs, a partner at Dell Tech. Jonty, good to have you.
Stu, thanks for having us. Yeah, good to be here.
Excellent. Just some housekeeping quickly for those who are on. On the bottom of your control panel, there's a Q&A option. Please put your questions in there. I'll pass them on to Jonty. He'll ask for an answer as he runs through his presentation. And if you can give us a little high five or a thumbs up on the Zoom panel, just to let us know if the sound is coming through clearly, and you can see Jonty and myself on screen. I think there's a little raise hand option there. Chris, if you can just whisper in my ear if that is coming through. But Jonty, I think we're good to go, huh?
Brilliant, brilliant. Well, Stu, thanks very much. And for all those of you who've taken the time out to join us today, thank you. Let me share my screen and I'll take you through the opportunity. So let me see. And Stu, you can see this?
Brilliant. Thanks, Jonty.
Super. As Stu mentioned, my name's Jonty Sachs. I'm one of the partners at Dell Tech, and we've got quite a unique investment today to talk you through. This is our sixth Section 12B investment, our second Section 12B investment within the solar market. And I think what's really unique about this investment is the time of year that we can offer it. So Section 12B, it's a tax incentive, and I'm going to give you some information into the incentive, but it's really applicable for those investing now for this financial year. So if you've got a tax problem, whether it be income tax or you've got a capital gain, maybe you sold a property or a share portfolio, and you've got a tax bill at the end of February, well, this investment should really speak to you. So kicking off, just a little bit of background into Dell Tech. We've deployed over R1 billion into the solar market over a number of years. We currently manage over 250 solar sites across the country, thousands of residential homes across the country, over 48 megawatts of commercial industrial solar. And what's really impressive is across our entire portfolio, 98% of the consumers of our electricity are paying on time. So as an investor, yes, I will be focusing on the tax benefit here, but you are going to be generating a return from a portfolio of solar assets. And if you look at our track record from a collections perspective, we're collecting well in terms of our portfolio, and we're able to pay out the returns that we are targeting. And we've been able to achieve this huge deployment numbers, and the fact that we're managing over 250 assets across the country is really attributable to the size of our team. So unlike other solar funders in the market, we don't really outsource a large portion of the investment to third parties. We have a lot of the skills in-house. So our team is headed by Andre Potgieter. He's got over 20 years of experience in the solar industry. Our investment side of our solar business is headed up by Ryan Grove, and they're supported by engineers, project engineers, a monitoring team. Almost every single system that we own, we do all the monitoring. So we have our finger on the pulse in terms of how much the system is producing, because if systems have a reduction in production, that means less revenue, it means less return. So we have those capabilities in-house. We assess all our projects, we monitor all our projects, and we make sure that they don't skip a beat. And so far, things are going exceptionally well.
Jonty, I see Sunex at the bottom of there. Can you explain the partnership there?
Yes. So Sunex is a business that we acquired a couple of years ago. And really what Sunex is a developer, which with that acquisition gave us the skills and expertise we needed to execute on these projects. So Sunex has been in the market for more than 10 years. They manage over 100 different sites. And to springboard our business into having the skills and expertise, an acquisition with Sunex made sense for us. So a large portion of the team came over, and it's just given us the robustness that we needed to make really good investment decisions in this market.
Cheers.
So, for those of you who don't know, I'm going to just touch on what Section 12B is. Section 12B comes out of the Income Tax Act, similar to Section 12J. It's been around since 2016, so a long time. It went through a period where it was 125% tax deductible. It's now reverted to the original 100% tax deductible, and I'll explain the numbers in a few moments with you. But to get the tax deduction, you need to invest The capital then needs to be used for qualifying assets, and these are solar assets. So this is solar panels, batteries, inverters, and related equipment. And as long as this equipment is producing electricity within this financial year, the investors qualify for the Section 12B benefit. And as I mentioned, this is our sixth investment. We've got over 600 or 700 investors. I'm not aware of anyone who hasn't gotten their tax benefit, and I'm one of them. Obviously, some investors go through audit processes, which we assist, but by and large, this has been a really, really successful investment from a tax deduction perspective. Now, just to give you a sense of how the deduction works. So this example on the screen is someone who doesn't invest into Section 12B. They have a taxable income of 5 million Rand. They decide not to invest, and as a result, they're paying just over 2 million Rand in tax to SARS. The same investor decides to invest 1 million Rand, which you'll see on the second line. They've now invested 1 million Rand. They get a tax deduction of 1 million. And this means that the tax that they're going to be paying is no longer on 5 million, it's on 4 million. As a result, the tax due is around 1.6 million. And if you do the difference between not investing and investing, that saving is 450,000 Rand. So this investor would have either, if they're a provisional taxpayer, at the end of February, not pay 450,000 Rand in tax, or if they're a PAYE payer in July, August, they'll submit their e-filing submission, and they'll get a refund of 450,000 Rand. So that's really how Section 12B works. I'm going to explain a little bit more into how we've increased this number from 100% to 230%. And we achieve this through debt. So with this investment, we've raised, for every 1 Rand of equity, every 1 Rand of investment, we've raised 1.30 Rand of debt. And why this is important is because both the investment value and the debt goes into the investment, and our investors can get a deduction on their investment and on the debt portion. The debt portion, they're not responsible for. If the bank forecloses on this investment and the bank sells the assets for less than their debt exposure, our investors are not liable for the debt portion. The bank has no right to knock on your door as an investor and recover the capital. In addition, this structure with the debt is a structure that we've been using for a number of years and has been really effective for our investors, and they've been able to claim the tax deduction. There are SARS rulings on this structure. We've got legal opinions on the structure. This isn't something new and fancy that we take into market. This works. So to give you a sense of how we get to the 230% tax deduction, here's the same example I've just spoken you through. So an investor invests 1 million, he gets 450,000 as a refund. We then debt will be then introduced to the investment of another 1 million. And in this example, and I'm going to explain in slides to come how we get to the 230%, but in this example, the investor will have gotten 1 million Rand investment, 1 million Rand debt, and the combined tax deduction for this investor would be 900,000 Rand. And again, I'll explain in a moment how we get to the 230% shortly. Okay, so that's the background, and let me now dive into the investment. As Stu mentioned earlier, if you have questions, please insert them in the chat section. If you are shy and you don't want to ask a question, or you want to ask a question at a later stage, the recording will be made available most likely tomorrow or on Monday. My contact information will be available. If you want to meet one-on-one or you have further questions, you'll be able to reach me directly.
John, I think you spurred someone into action there. I won't use full names, but this is anonymous. What is the minimum investment amount for the project?
The minimum is 500,000 Rand for this investment.
Cheers.
So this investment is in partnership with a company called Wetility. They're the second largest residential solar player in the market. So if you are looking for solar for your home, they're an incredible outfit. And they're backed by one of the largest private equity funds in the market called Metier. So we've partnered with Wetility. The capital used will be used to acquire a portfolio of solar assets, and Wetility are going to be the operators. They're going to assist with cleaning the panels, with customers that cancel and removing the equipment and replacing it, but they are our partner when it comes to operating. So this is investors will have exposure to residential solar systems. These systems are over 3,000 homes. It's an existing portfolio. We know the seller of the portfolio really well. Their business has changed focus and they're moving out of residential solar. The systems are predominantly in Gauteng. The owner of the system was one of the first to market, and the benefit of this is that they were able to capture the really affluent areas in Johannesburg, Bryanston, Craigle, Parkview, etc. And as a result, across this book of 3,700 homes, their default rate, in other words, the percentage of people not paying for the system's usage or production, is less than 1%. And that really speaks to the real solid creditworthiness of this book. So we think the portfolio is exceptional. We think it's an incredible opportunity from an investor's perspective. It comes with risks, obviously, and I'll talk you through them in a moment. But the tax deduction, which I'll explain shortly, what it equates to is if you invest 100 Rand, you'll be able to claim a refund if you're in the highest tax bracket of 104 Rand in this financial year. And I'll explain that. There's capital protection for investors. So Utility, they have skin in the game. They are putting in a loan into the structure, and I'll discuss that in a little bit more detail at the end. And excitingly, this is for investors in this financial year. It's unique that we have such a material opportunity this time of year. Normally, we can only offer this in June, July, but it's because we have an existing portfolio of systems, and that qualifies in terms of Section 12B. So I'll take you through a couple of the key benefits and then the risks. So one of the key benefits is the deduction. Okay, so I mentioned earlier, similar example, investor invests 1 million. He's entitled to 450,000 Rand tax refund if they're in the highest tax bracket. Together with Utility's contribution, we've got a debt provider who's already on board. We're finalizing terms with our debt provider, and their combined contribution in this example would be 1.3 million Rand. So if we combine the million and the 1.3 million Rand, the combined tax saving is just under 1,040,000. So 1,035,000 Rand. Again, what this means is if you're a PAYE payer, if you're in the highest tax bracket, if you invest 1 million Rand in July, August, you can claim back 1,035,000. If you're a provisional taxpayer, if you invest 1 million, you don't have to pay 1,035,000 in this financial year. So effectively, putting it differently, and Stu and I were involved in a conversation with a potential investor in the week. The opportunity here is instead of paying the tax you would have paid to SARS, you can invest that tax and you can get a return on it as opposed to paying the tax. You can decide which you think is a better return.
John, just quickly, you mentioned PAYE and provisional taxpayers. Can the investor be a PTY limited?
Absolutely. Companies, they enjoy the benefit at a 27% tax bracket as opposed to 45%. So although the tax benefit is less attractive, the company, when it receives its distributions, will pay less tax. They'll only pay tax at 27% versus 45%. So interestingly, although the tax benefit isn't as attractive, over the term of the investment, the returns after tax are extremely similar. So to answer your question, yes, as well as a trust, we've got a number of trusts, but the overwhelming majority of our investors are individuals. So another key benefit is a first loss. So Utility will be contributing into the investment of around 17%. And what this means is if the total systems value was 100 Rand and the investment went really south and we sold the investment for 90 Rand, the 10 Rand loss would not be absorbed by investors. Utility would absorb that loss. And for us, it's a really carrot and a stick incentive. The carrot is if Utility do well, they'll earn really significant profit share. If they do poorly, well, we're going to eat into the capital that they've contributed. So you want your operator to be incentivized, where a homeowner, if they cancel, they'll go and take these systems off the roof and redeploy them. And that talks to the next benefit is we've got an operator, they're installing hundreds of homes a month with solar. They can easily take a system that isn't earning income because the homeowner is cancelled or defaulted. They can take that system and redeploy it somewhere else. Investors have huge diversification. So 3,700 homes. A huge material portion of this portfolio needs to default or cancel for investors' returns to be materially affected. Another aspect of the investment is at the end of the 8-year term, so the 8-year investment, although it's 8 years, you're getting all your money back if you're in the highest bracket in the first year. So at the end of the term, Utility have a contractual obligation to buy out the system at year 8. And there are obviously certain requirements that they need to achieve to do that, but this really gives investors or places investors in a position where there's liquidity at the end of the term. And then obviously the returns, which I'll talk you through. So I think investors need to be mindful that investment of this nature is materially de-risked upfront. You're investing 100 Rand, you're getting 104 Rand back in the first year if you're in the highest bracket. Okay, so given the risk profile, the returns are good, but they're not the returns you're going to find in private equity or venture capital. We're not looking to double, triple your money here, but this isn't the nature of this type of investment. This is an investment that generates a yield. So one of the things to consider with this investment is the income that the investment generates. It's all taxable. So we're going to generate income from the debt that we've raised, and we're going to generate income from the equity that investors invest. So the partnership will receive a lot of cash flow every year. We'll distribute it to investors, but the investors have to pay tax. So we will distribute a sum of money which will allow investors to pay the tax, but that leaves investors, if we look at the first year 1 to 3, cumulatively with a 5.4% yield. So investing 1 million, you'll earn 54,000 Rand over that period. The next period, years 4 to 6, that goes to 5.6, and in the final year, that number jumps to just over 16%. But to understand it slightly better, I'll show you on the next slide. But to come to these numbers, we've taken a few assumptions into account. Investors in the highest tax bracket, they invest 1 million Rand. Prime rate remains where they are. The assets are sold in year 10 at 20% of their value. And then we've assumed that 3% of homeowners cancel and we don't redeploy those assets. So those are the assumptions that we've taken into consideration, and we think that those assumptions are reasonable. But if we cut through the graph and we look at the actual numbers, I want to draw your attention to the second line. So the first line, this is your pre-tax return, but let's look at your post-tax return. So you now pay tax, what are you left with? If you include the tax benefit, you're left with 1.3 million Rand. If you take away the tax benefit, you're left with around 300,000 Rand. And this 300,000 Rand is the true net return after fees, after taxes that investors are receiving. So you can either pay tax of 1 million, or you can invest with us, get a refund, and earn a yield over the term of around 300,000 Rand. If you look at if you go further down, the IRR is enormous because you're getting your money back so early on, and then you're generating a return. And if you look at the bottom of your screen, if we take the cash flows from the investment and we average it out, you're earning 3 to 4% per year on 1 million Rand. So 30 to 40,000 Rand per year, every year over 8 years. And that's effectively what this investment is returning. But as I said, this investment is not without risk. So the first risk is deployment risk. And to explain this is, if we don't invest the capital, investors don't get a refund. In this investment, we're in the final stages of signing final agreements with the seller. We've agreed terms. We've signed binding terms. We're exclusive. We've agreed on price. We've agreed on structure. We're just finalizing the legal agreements. When investors sign a commitment form, we'll only draw down the capital once we've finally secured the portfolio, and that's imminently. So I think from a deployment risk, it's extremely low, but it's a risk. The next risk, I think, is the highest risk of the investment, and that's cancellation risk. When homeowners cancel, so a typical, all homeowners have signed for 3 years. After their 3-year term, if they choose to cancel, they pay a penalty of 3 months subscription. Now, at the moment, the cancellation rate's tiny. It's like 2.7%. It's minuscule, But as these contracts start maturing, a larger portion of the contracts will mature, and this rate may or may not go up. However, we've got a partner utility. They will have to replace these assets or remove these assets and place them somewhere else. So we have a company who will be removing the assets. So the cash that was supposed to be generated from these assets that is lost will be lost for a shorter period of time because we have someone proactively moving the assets. The second is credit risk. What happens if people stop paying? Well, if they stop paying, returns will drop, will be under pressure to pay back the bank. But here, this investment is diversified, 3,700 homes. At the moment, the bad debt percentage is less than 1%. So we think that this risk is low, but it's a risk. Debt funding availability, if we don't raise the debt, well, then investors won't get the additional deduction. Well, I can tell you in this portfolio, the debt provider is the current debt provider of Jalech, and we've raised hundreds of millions of rands from them, but they're also the debt provider for the seller. We've pretty much agreed terms with the debt provider. We think it's highly unlikely that we won't get the debt, but it's a risk I must just inform investors, and we'll know within the next week when we're going to be signing final agreements. So things are really, really positive, and I don't feel that it's much of a risk at all. And then obviously debt risk. If we have a huge amount of defaults, we then have an obligation to pay back the bank, and we'll be under pressure if we don't have the cash flows that we anticipate to pay back the bank. And then if things go really south, what will happen is the bank will then foreclose and sell the solar assets. Fortunately, there's huge diversification. We think this risk is extremely low. But as you remember, the debt to equity ratio here is really, really low.
Jonty, just on the risks, Anonymous wants to know, is the lack of load shedding affecting investments, or is there a lack of load shedding?
So lack of load shedding is affecting the growth of the residential market. So, May 2023, in the peak of load shedding, solar installers were doing, or utility and its competitors were doing about 2,000 installations a month. That's dropped to about 400, 300 a month. That's what we're seeing at the moment. So uptake is less, but it's still quite material. 200, 300 installations a month is hundreds of millions of rands into the market. So it's for players in the solar market, not great, because growth has slowed down, but there's still a massive opportunity. Where the real opportunity will continue to be is the cost of electricity. So Eskom is continuing to increase the cost of electricity. We're seeing most of the homeowners enjoying a savings, and as the price goes up, more and more homeowners will pay more for electricity, and as a result, they'll be moving to solar. So one of the risks here we mentioned is cancellation. I think this risk is materially reduced every single year that the cost of electricity goes up, because homeowners are incentivized to carry on paying for the solar, because they don't want to be paying Eskom anymore.
Just on the risk, sorry, Jonty, one more. Ryan just wants to know, is the solar licensing with Eskom a risk, and how has that been managed?
So solar licensing at the moment, if you're a new installer, so if you're installing new homes, as of March, there's a new fee. I think it's 9,000 Rand. So that's just a barrier to entry. But we're not dealing here with new homes. These homes have already been installed. They're already compliant. So if I was presenting an opportunity where we're looking to roll out 1,000 new homes, we would have to take into consideration the 9,000 Rand at additional costs. So that isn't an issue at the moment or at all for this portfolio.
And just one other question from Dow and Stephen. You talk of residential. Is it exclusively residential or mainly residential? And what about commercial and industrial?
It's this portfolio is only residential, but residential, overwhelming majority of these homes, and there'll be a couple of estates and apartment blocks, but by and large, almost completely homes. Just to touch on the investment highlights, the minimum investment's 500,000 Rand. I discussed the 230% deduction. Your investment is underpinned by a physical asset. So if there is a default and we need to sell assets, we can sell as a physical asset. Investors are exited through distributions. They're already exited upfront with a deduction. The post-tax IRR is 25%, really high. We have a fundraising cap, so we have a limit in terms of how much we can raise. And investors should enjoy income for 8 years from the investment. I want to just touch on, so we just got a poll that's just popped up. And this poll will really give you an opportunity to indicate whether you're interested in knowing more. And if you are, we'll then reach out to you and provide you with more information. That brings you on to the fees. These fees are pretty much in line with our fees historically. Our management fee is 2.25%. There are a lot of people that we need to employ to get these type of investments managed. We don't charge a performance fee for the first 3 years. After that, we charge a performance fee of 20% over a hurdle of 12.5%. And then there's a performance fee on the sale of the assets. I think that aligns us with investors. We want to get as much and all the money that we can for the assets. And then there's a debt raising fee or once-off fee of 3% once we've secured the debt. And then finally, contact information. So again, this recording will be distributed and you'll be able to contact myself or Chris, as well as any information that you may need. And then lastly, just a quick disclaimer.